We've seen something of a recovery in the cruise line operators. That's after the new U.S. Commerce Secretary, Howard Lutnick, made comments last week suggesting that cruise operators would have to start paying U.S. federal taxes. Our guest says any plan to increase the take from Carnival companies for the IRS would face pushback from various quarters. Let's get more from Patrick Scholes, Managing Director, Lodging and Leisure Equity Research at Truist Securities. Thanks very much indeed for joining us. So we have been hearing from observers of the cruise industry that this idea of taxing the cruise operators has come up before, but it hasn't come to pass.
That's absolutely right. And the last time we heard about this was an initiative in 2017, and it didn't really go anywhere. You know, you got pushback from congresspersons in Florida, in Alaska, you know, all these places where you have many stops and departure points for the cruise lines. However, out of the blue on Wednesday night, you had the Commerce Secretary on Fox News be, adamant that he and the Trump administration are going to tax the cruise lines. So it made for an interesting trading day on Thursday for the cruise stocks, to say the least.
Maybe we could put up a 1 week chart for Carnival, the giant industry player, CCL, as an illustration. Of course, and they're very adept lobbyists. Apparently, they are big spenders on lobbying as well, the cruise lines, like so many other industries.
Yeah, that would not surprise me in the least. Obviously, very strong relations in Florida and Alaska, especially. Yeah.
Let's get to some two cruise stocks that you do like. Norwegian Cruise Lines, you have a buy rating. What attracts you there?
Yeah, I would call Norwegian, of the three major companies, the one with the most opportunity for self-help. And by that, I mean, number one, some catch up on costs. You know, they have sort of a known or legacy reputation, maybe not being the tightest on costs, but they have a fairly new CEO in here who recently introduced a substantial cost savings program. And I think pretty highly likely he's going to meet it. And that can be very material if they hit that. That combined, I think they also have some catch-up opportunities with their competitors who are introducing private islands. Certainly Norwegian a bit late to the game, but I do think there's what we call a catch-up story. And that's a lot of that is reflected in the cheapest valuation of the group. So combine all those in there, certainly makes, between that, neck and neck, and Royal Caribbean, my two favorites. To be clear, it's not that I dislike Carnival. In fact, I really like the group. I just try to pick a favorite or two.
For sure. That's interesting. Are many players doing that, acquiring private islands that they can bring the customers and I guess capture all the revenue?
Absolutely. I mean, it is the big story right now. Right before COVID, 2019, you had Royal Caribbean come out with their private island. And it's not just necessarily private island. They've always had sort of generic private islands, but it's kind of turning private islands into almost like island theme parks, kind of like Disney World, where just bells and whistles and lots of cool water slides and all that. I mean, the customer just absolutely loved it. So Royal came out with that. And this summer, you're going to see Carnival come out with their first, upgraded bells and whistles private island. And then I believe, again, it's next year, Royal is going to have their next island coming as well. So I also think there'll be more coming. And I wouldn't be surprised somewhere in the next 6 months to a year, we would have Norwegian talk about some upgrades to one of their existing islands as well.
And just as you mentioned, so Norwegian, and you also have a buy on Royal Caribbean. What attracts you there in particular to Royal Caribbean?
Yeah, they're really the thought leader of the group. And I would say at the moment in my greater lodging, travel, leisure sector, it's really the management. This is the management team that's really been just creatively hitting it out of the park first to do this type of private island. Some of their new ships have just been so well received, sort of how they're changing the timing of how many days you go on a cruise. All these things that, in hindsight, yeah, you probably should have been doing, but it took Royal Caribbean to do it. Now they're going to be moving into big port in Galveston, Texas. Lots of opportunity with them. So they're really sort of the first mover advantage with a lot of somewhat outside the box creative ideas. And you can see that obviously reflected in this very strong performance in the share price.
You said that you don't dislike the other cruise companies. You just see the others as offering benefits, extra benefits right now. Viking Holdings, dominant in river cruises. I wouldn't mind trying one down the Danube myself if anyone's buying me the ticket. But you're less keen on Viking right now.
So again, I want to be clear. I like the whole sector. I just again try to pick favorites. I would say the one thing, Viking, it's not an inexpensive stock. And then secondly, there is some fairly recent news out there that Royal Caribbean, on their recent earnings call about a month ago, announced they are going to be getting into the river cruising segment in about 2 or 3 years from now. And this is really the first time we've seen any of the legacy major players getting into that. So Viking's going to have some new competition where previously they were really the big dog and really didn't have to worry about anybody else. And I would suspect that you might see the Carnival or some of the Carnival brands or some of the Norwegian brands follow Royal's lead. So that's going to probably heat up in competition, 5, 10 years from now. Nothing, in the near term, but it's something really we got to be starting to watch out for in Viking, which, if we go back 6 months ago or 9 months ago on the IPO, really wasn't an issue. So you do have some more competitive threats coming on Viking. But other than that, it's a fantastic company. And this year, next year look great for them.
And then just finally, the industry giant Carnival, you feel a lot of the good news is in the stock already?
No, I think there's obviously some catch up after last week. Interestingly, not only did we have the issue around the potential tax, there was a very cryptic article, an online article talking about the next COVID might have been found in Wuhan, and that hurt the stocks on Friday. So there's a lot of noise out there, and probably much of it doesn't come to fruition. But this is an industry. I see the biggest risk of this industry not so much from the consumer. I get great proprietary forward-looking booking and pricing data. It looks phenomenal. But this is an industry that just unfortunately always gets hit with some sort of black swan event that's not so dissimilar to those two items from last week. But specifically on Carnival, I do think they're at a bit of a competitive disadvantage. They don't have any new ships, very minimal new ships coming on right now, where there are more for Royal, Viking, and Norwegian. And one thing that will certainly help Royal Caribbean, they just announced a share repurchase program, so that should be continue to be a nice catalyst. Where I think that's a later stage type of story for Carnival.
Thank you very much, Patrick, for joining us.
Thank you for having me on.
Patrick Scholes.